Jungle. Preview. Preview.
Assalamualaikum warahmatullahi wabarakatuh. Hi guys, welcome back with me Abdullah Husain Romadhoni. I'm from program Studi Agribisnis with name 45. In this presentation, I will tell you about taxes and taxation in business. Let's do presentation. First of all, my presentation is definition and function of tax. Taxes are mandatory contribute to a country that is owned by compelling person or entity under the law with no reward, directly and used for purpose the state for the greatest prosperity of the people. In general, there are four functions, namely budgeter. Taxes serve as a source of funds for the government to finance its expenses. Number 2 is regular. Taxes serve as a tool to regulate or implement government policy in the social and economic field. Number 3 is redistribution. Redistribution emphasizes income distribution and the enhancement of progressive rates. Number 4 is stability. State taxes as state revenue can be used to carry out government policies. Next. In this slide, we'll be tell you about the subject and object of various taxes. A tax subject can be defined as a person whom the law addressed to be taxed. Income tax is imposed on the tax subject with respect to the income received or earned in the tax year. 1. The private person. The private person individuals as tax subject can reside in Indonesia or outside Indonesia. Number 2 is inheritance. Inheritance that has not been divided as a unit replace those who are entitled to support and in undivided inheritance as a substitute tax subject, so that the imposition of tax on income originating from the inheritance can still be carried out. Number 3 is agency. The body consists of a limited liability company, BUMN or BUMD, joint venture, and other firm or entities. Number 4 is permanent establishment. What is meant by a permanent establishment is a form of business that is used by an individual who doesn't reside in Indonesia or outside Indonesia for not more than 183 days within a period of 2 months, or an entity that is not established and is not domiciled in Indonesia to run a business or doing activities in Indonesia. In this slide, we'll be tell you about the subject and object of various taxes. Any additional economic capability received or obtained by a taxpayer, whether originating from Indonesia or outside Indonesia, which can be used for consumption or to increase the wealth of the taxpayer concerned, in the name and the form of anything, including A. Replacement or compensation in employment, B. Operating profit, C. Profits or transfer of property, D. Dividend, A. Royalty, F. Rent, and any other. Next slide. In this slide, we'll be tell you about tax ties with business. For business people, tax is strategic aspect that needs to be considered in the business planning. This is because besides having a financial dimensions, liquidity or profitability, every business transaction needs to be examined whether it has tax implication or not. Both PPH, PPN, PPNBM, and BPHTB. Likewise, with documents relating to transaction. Company profile PT Lazizaa Rahmat Semesta determine how the implementation of the policies in terms of taxation, in particular the application of income tax on the joint venture, both based on the application of tax laws and regulation, as well as based on the agreement with the contractual agreements in the joint venture. In this slide, I will tell you about joint venture. Today, the development of the progress of modern science and technology in the world of construction and in the world of construction consulting service is very fast. With this development, one of the company effort is developing its business is by conduction or implementing a joint venture with other companies which wish to participate in collaborating in developing their business. A joint venture is a separate unit that involves two or more active participants who become partners. Construction services are a form on joint operation. Construction services have an important role in supporting various fields of development and also play a role in supporting the growth and development of various goods and service industries related to the implementation of construction work. The construction service sector plays a very important role because this sector is the main physical support in the implementation of development. In all fields, this construction service include construction work planning, consulting service, construction work implementation service, and construction work supervision consulting service. The success of infrastructure development projects carried out by the government is largely determined by the rules of the construction actor involved, one of which is the involvement of construction consulting service. In this slide, I will tell you about case study. The imposition of joint venture tax is the form of jointly controlled entities is imposed on each venturer because this form of cooperation involves the establishment of a separate entity that is jointly controlled. Each venturer has their respective share in taxation based on the percentage of equity participant. Records of other aspects of taxation are carried out by the venturer. Thus, each venturer is fully responsible for the tax consequence concerning its part, including its tax responsibility during a tax audit. The treatment of tax withheld by the joint venture company is in accordance with the prevailing tax law and regulation. A joint venture company is established without the aim of seeking a profit on the activities the company carries out in project implementation. Thus, the income received by the joint venture company is the difference between the funds or capital provided by the employer, project owner, and the cost incurred to finance various purposes in the project. This joint venture company has unique characteristic because it's in a non-subject taxpayer. This implies that As a taxpayer, a joint venture company has tax obligation like other taxpayers. However, because this joint venture company is not a tax subject, it can be said that the parties who can actually bear the tax or who have the tax obligation on transaction carried out by the joint venture company are the venturers. A joint venture company has a taxpayer identification number and PWP. Even though it is not a tax subject, the ownership of this NPWP is because this company is a taxpayer who has the obligation to deduct Income Tax Article 21, Income Tax Article 23, and Income Tax Article 4, Paragraph 2 on the object of the compensation paid. The size of the transaction cost is calculating the joint venture company tax is influenced by two factors, namely controllable factor, consisting of compliance with tax obligation, bookkeeping, and application of tax avoidance technique, and uncontrollable factor. The government has not provided tax incentive for joint venture companies in Indonesia, arguing that tax intensive provision is deemed to only have a bad impact on the revenues of the state of Indonesia, which is developing country. That's all of my presentation. If I have a mistake, I'm sorry and I forgive. Thank you for watching. Wassalamualaikum warahmatullahi wabarakatuh. Bye.